Hi guys, and welcome back to the Social Traders YouTube channel. So in this video, we're going to be taking a look at imbalance. Now, we've been getting lots of questions within our free community and a few questions on Instagram and that sort of thing as well, asking us what imbalance is and how we can use it to trade. So that's what we're going to be having a look at today. We're going to show you what imbalance is, where we can find it, and how we can utilize it to pick direction within the market. Let's get into it. Right guys, so now you join me on the chart. So let's have a little look at imbalance. Now, what we can typically see within the market is the majority of the time, the market is moving somewhat like this, okay? So we can see the market is moving a little bit slowly compared to when we have these nice impulsive pushes here, and we have these really strong bullish candles. Now what we can see is the majority of the time the candles will trade within each other, and it'll come and tap into the previous candle. So you can see that every single time the candle is trading within the previous candle. And then what we see all of a sudden is we see these really strong pushes in one direction, and what we see is there's then no candle within all of this space. Okay, so we can see that there's no candle filling in this space after. So typically what you'd usually see is the market would continue moving like that, and we'd have a candle within, so we can see that we have a push and then the candle come and touches the previous candle, so on and so forth. But what we see sometimes is we see these really strong pushes and we can see that there's no candles within that candle. So that's what we call imbalance, and that's what we call untested or insufficient price, okay? And this is usually caused by institutions. It's caused by the big boys within the market. They push the market in one direction really quickly and give no one the chance to get involved. And that's essentially how we create imbalance and insufficient pricing, okay? So what we can see between the wick on this candle and the wick on the previous candle, we have no candles in between, and therefore we have created insufficient price or imbalance. And again, we can see it here. So we can see that from this candle to this candle, there's nothing in between it as well. So what we've then done is create more imbalance. Okay, so we can see that these are two levels of untested price. Now, you may have heard before that when we see gaps within the market, they have to be filled. It doesn't have to happen straight away. It can take a week, a month, a year, 2 years in order to be filled. We can use them as support and resistance, but sometimes they will also plow straight through those levels. And that's very, very similar to imbalance. We have to come and fill that insufficient price. We have to come and fill that imbalance. Now, it has to happen. It has to happen at some point. And at some point in time, it will happen. But what we can use is aid this to our trading. So we can actually incorporate it into our trading to kind of suggest where price may be going. So what we can see is the market has created that push to the upside. We've created, 1 and 2 different levels of imbalance that the market has to come and fill. So that could suggest to us that the market at some point will have to come to the downside. So what we can then assume is the market will at some point create a reason for us to take a short position. Okay, so for some reason there may be an opportunity up here for us to take a short position. It may be because of an ascending channel, for example. Okay, and then what we see is the market will have to start to make its way to the downside. And let's say we see something along the lines of this, and we do take a short position and the market starts to push to the downside, okay? And we see a little bit of something like that. And then what we see is the market starts to rest a little bit, like so. We start to print some smaller candles before we then see a continuation, and we see the market continue to move to the downside. Okay, so then we start to see this sort of thing. And what we can then see is the market is now making its way back in to fill the imbalance before we continue back in that bullish trend. So for the sake of the video, let's say it looks a little something like this, okay? So this is now what we've got. So we can see that we've had that imbalance, that strong push to the upside. That's then given us cause for the market to come to the downside and fill that imbalance before the move continues. But what we can also see there is we created more imbalance to the upside in the way that the market shifted to the downside. So we can see that there was, very little to no candles in between this imbalance. We had all this insufficient price, and that then gives cause for prices to then move higher. So you can see how that works, okay? So it's given us cause for prices to come lower, the move from the upside given us cause for price to move higher. So that can give us confidence to take a sell position, and it can also act and give us confidence to take long positions as well when we do see imbalance in one or more direction, okay? So hopefully that makes sense. Now, we don't have to fill imbalance fully. We can fill, 50, 60, 70, 80, or 90% of the imbalance. We don't have to completely fill it all. So what we could see is something more along the lines of this, where we only fill around 50% of it before the market continues in our intended direction. So let's say we only fill 50%. That's perfectly fine as long as we come and mitigate and fill more than 50% of the imbalance. So that's essentially the diagram of it. That's kind of how it works. We know that big boys, banks, institutions create these fast moves that no one can get involved in. It's therefore untested price, and the market then has to come back and fill those areas before it continues. So that is the little diagram. Let's have a brief look at a chart example. So before we go any further, guys, make sure you do leave a like on the video, subscribe to the channel, and also drop a comment down below. Do you agree with our opinion, or does yours differ? Let's get back into the action. So this is a chart example of dollar Swiss. And what we can kind of see here is we see these really strong candles in certain directions, okay? We see these really strong pushes, and looking at what we just talked about, we can see that we have got, that untested price action. So from this area to this area here, we can see that there is no previous candles in and around that area, okay? And when we look at all these previous candles down here, we can see that, the candles are within the candles, okay? The candles are filling each candle. Now, what we can then see is the market has that strong push in one direction and there's no candles filling it. That is now untested price action. It's just imbalance, inefficient price action, whatever you want to call it. There's many, many different words. So what we can see is we have created that. Now, when the market has moved up here, you can see that there is now, let's say there is a potential for a short position. We can now use this imbalance to aid that. So if we now have, the ideology, for example, of a short position, we can now use that imbalance as an extra confluence because we know the market has cause to come lower as it has to fill the imbalance. You see how we can use that, okay? Now, again, we can use this all over the charts and we can see it all over the charts as well. So for example, if I just draw something like this on, so for example, we see all these candles are still within each other. Even when we had that strong push there, we can see that the wicks actually came and filled the wicks there. If I just zoom in, you can see that, even though we have a strong push, the wick came and filled the previous wick. So therefore that is still perfectly fine. Then what we can see is the market had a strong push here. Okay, we went and pushed to the upside and we left this insufficient price. We can then see that the market had cause to come back to the downside, okay? The reason that happens is because of the imbalance. We have cause to come lower. Again, we can see it here. So we had this level, we had a strong push, we had this imbalance, and then the market came and filled in that before continuing. You can see this repeat itself time and time again. Here we have a strong push and we have left that insufficient price where there is no previous candle between that. Okay, so you can see how this works. And this is what I'm saying about it doesn't have to happen straight away as well. because we can see here that it took an awful lot of time for that to come and be filled. Okay, we can see that that took a bit of time. So again, it's not going to happen straight away, but it will happen. We can see it up here where we have that untested insufficient pricing yet again. And when the market is up here, if we do see an opportunity for a short position, we then have that cause and that case for the market to go and push lower because of that insufficient pricing. Okay, so hopefully that makes sense, and hopefully you can kind of see how we can use that in order to aid our direction and our bias. So looking at this, there could definitely be cause for the market to continue to move higher, as we do have this insufficient price up here. Okay, so again, we do potentially have cause for the market to go and move slightly higher. Now, if we focus back to this bit of price action over here, we can then start to analyze this a little bit more closely. Now, what we can see is we have got more insufficient pricing. We can see that around 50% of that has already been filled. So technically we don't have to come and fill it all, but looking at some other factors that we utilize into our trading, we definitely could see the market fill the 100% of that imbalance before we continue to fill the imbalance that we've created down here. Now, what I'm going to do is I'm going to strip that back to about here very quickly, and I'm going to show you exactly how, one way we could use that to aid our trading. So if we drop down onto the 4-hour time frame, we can now see that imbalance really clearly. And you see that sometimes we will have to kind of adjust that and adapt it, based on different time frames. It's not going to look exactly the same on every time frame, but you can see that we have definitely created imbalance there. We have also created imbalance here within this space. So again, we have multiple causes for the market to come and fill this imbalance and this imbalance. Whether it continues to the downside from here, whether it fills the imbalance and continues back to the upside is a different story for a different day, and we'll have to assess that when it happens. But what we can see is the market has created cause for us to move to the downside. Now, what we can see here is if I drop down to the hourly time frame, we can start to have a closer look at price action. And for me personally, I know that there is a short position here, as we do have this clear ascending structure. We've then had an impulse to the downside, okay? So I know that when we have an ascending structure followed by an impulse, I'm looking for a correction and a continuation for the market to move lower, okay? So in this case, what I can kind of find out is we have broken structure to the downside. We are now seeing really corrective price action in this form here. And I'm not going to get into exactly how we've gone about this and how we've managed to find a trade here, as we do cover how we trade in full within our strategy. But we know that the market is going to move from the downside from here. We do have other reasons to why that is happening as well, again, which we will kind of cover in full in our strategy and in our content. But what we can see now is the market has cause to come to the downside, and we can use that to then aid our trading, okay? And that's typically how we go about it. And you can see that how well that has worked. It does work time and time again. And we can see the market continue to move sideways here, continue to move sideways. Didn't really show us too much. And we can see that the market is now starting to move to the upside a little bit. We're starting to mess about. Now, what we've seen here is the market has created more imbalance, okay? We can see that. So if I just remove all these drawings here, we can see that the market potentially has cause to move higher, as we have this untested price. We've left this imbalance behind that the market has to come and fill. Now we can also see that we've left imbalance down here, like so. So we know the market also has cause to move lower and to move higher on the shorter term. So we know we have imbalance here, we know we have imbalance here. Now, depending on how you trade and your strategy, you can use this to kind of dictate when and where those positions are going to happen from. So me personally, I know that we've now taken liquidity from these lows. I can see we've broken structure to the upside, and potentially there's a reason down here that I could now see the market fall into, tap into, before going and pushing higher and filling the imbalance that was left here, before we then see that continuation to the downside. So hopefully that makes some sense, and you can kind of see how we go about that. So we don't want to give too much away, as it's not really fair on our community members, but we do kind of go into more depth within our course, within our strategy, on how we can use imbalance to trade and how we can really refine it, how we can really use it to our advantage. But that should give you a pretty good understanding of what imbalance is and how we can kind of use it, how we can kind of depict that direction and use that to our advantage as well. So if you did like that video and you did take some value from it, do leave us a like. Make sure you comment on the video if you did like it. If you want more questions, if you're curious, do ask us in the comments as well, or drop us a message on Instagram at The Social Traders. We'll get back to you straight away. We do also have a free Slack community on our website. So the website is in the description. Go check out the free Slack. Get in there, ask some questions to us and our community members as well if this sort of stuff does interest you. Make sure you subscribe to the channel as well. It does help us out. It lets you know that you are enjoying the content, and we will see you in the next one.